Hello YouTube, I'm back with another video, and today I wanted to be analyzing the gold chart. So let's just right off the bat look at it. As you can see, I typically divide my charts into strike prices. If you don't know what strike prices are, basically there are these lines that I drew along the charts, the dotted lines, and basically they are the main focal points where the institutionals buy and sell their positions. And as you can see, they're placed at every hundredth. So 1,400, 1,500, 1,600, 1,700, 1,800, 1,900, and so on and so forth. I also put two little ones at 1,950 and 2,050. I mean, those are pretty much not saying as important as the 100th mark, but they still have their significance. As you can see here in this level, gold retested in the 50s, and so did here. Okay, I'm not gonna be judging these ones or these ones because I didn't draw them, but you get the point. So basically, as you can see, the market is very I accidentally removed the strike price. So as you can see, the market is very attracted to these strike prices, and I mean of course they are, because institutionals trade on them. So as you can see, just in the last weeks, gold did a huge upside candle here, wick, until 1975 pretty much, and then retested until 1878, and pretty much stabilized in the 1900s. So we can say that this strike price over here is pretty much consolidated. So this was a pretty actual good place to place your trades in the buy. So for the short term. Now, it's pretty hard to explain in English because I'm used to do these things in Italian, but I'll try my best. So sorry if I just maybe pause a second to think to what I'm gonna say, but I'm just improvising and I'm not actually planning what to say, because I mean it's real-time data, so you can't just wait and you have to just write on the opportunities. So let's say that the market now is way overbought. I mean, just think about it. Gold, yeah, it's gonna go long in times of uncertainties, but I mean, it hasn't dropped that much for a long time, at least apart from this, the ones I was talking about before. I mean, pretty much, let's say 100 points just to round it up. But you can actually add them on here. This is pure technical analysis. And you would see that the price market is going to at least 2070. I mean, that's my forecast. It is going to go over there. I mean, I'm 90% sure of it. And there is also a semi-strike price at 2050. And the last one is 2100s. I mean, just think about it. The big banks, or I mean the big institutions, the people that have a lot of money, are going to sell their positions once they're going to make some profits. I mean, they're not going to sell all their positions, but they're going to sell partially their positions. So let's say that they already did, of course, at the 2000 mark. I mean, that's pretty much legit. As you can see, if we're going to scroll down, institutionals of course sold in this zone. I mean, you'll have this retracement, this retracement, this retracement, but still, even if they sold, the market still went up and they broke the 2000 strike price. Okay, so clear enough for now. I hope so. Now, what's the next strike price? Of course, it's 2100s. Where you're going to say, is it going to reach over there? I mean, It could, but we still don't know right now, okay? We just have to wait and time the market. But my guess is that even if gold is going long in the long term, it can't just pop up, It can't just go like this without having some retracements down the road, okay? So, my guess is that gold will have a sort of, a little retracement. It just had that over here, okay? It will do a nice, how could I say it? A head and shoulders pattern, okay? Getting the little strike price of 2050 and maybe reaching 2100s, but I'm more confident about reaching 2050 and not 2000. So having a nice head and shoulders pattern and then going down, okay? And you're going to say, if it's going long, why is it going down? It's going down because it has to retrace on where they sold previously to then have a nice retracement and then to confirm the same strike price that they sold with a double bottom and then continue eventually going long. And of course, all of the things that I'm saying right now is hypothetically that the war continues to move on, okay? So the more the war moves on, the more gold is going to be hyperinflated and the more volatility there will be in the markets. So that just means that there are going to be more price swings than maybe it was used to in the past. Let's just say down here, okay, in 2018, 2017, that the world was pretty much solid at that time. Then COVID came. Look what COVID did. See? March 2020. Yep, that was a big sell. Then, of course, the market was full of uncertainties, so gold price rose up to the 7th of August at 2050. And, I don't want to compare these both situations, but gold in 2020 was actually a bit higher than it is right now. And technically speaking, in 2020, the world was shut down, okay? So they didn't have any place where to put money unless on commodities and, materie prime, how do you say materie prime? On, oh my god, I can't even speak anymore. On, you name it. Oil, gases, gold, silver, and you get the point. So they had a few places to put their resources on. Meanwhile, in 2022, the stock market isn't going that well. In the last couple of weeks, but still, there are still places where institutionals could place their money, even in uranium stocks or just basically oil that is going up and up and up and up and up. As you can see, let's just search for it. $121 per barrel, that's a fucking lot, I would say. And yeah, you can see also in COVID, just went down to negative. Actually, it actually went negative, but we can't see it here from the charts. So it's pretty much nearly going to reach the all-time high from June 2008. 2008 was a fucking bad year. I was still a little guy, but, the housing bubble from the US hit hard. And, yeah. Now, Ukraine is hitting hard, so, it's getting hit hard by Russia. Anyways, that leads me to say that I don't think that gold is actually valuable as it was during the 2020s. So that's why I'm sort of hypothesizing that gold will have a little bit of sell-off during this period, and that's where I want to enter the market. I could be wrong, guys, but fuck it. I mean, it's a trade. No one's gonna be right all the time, and that's just my opinion. So basically, I would like to wait that price will reach 2050. Okay, so let's remove some of these drawings just to have a clearer graph. Okay, so pretty much I would love to short gold in these positions. So surely I want to put one trade here at 2050. Take profit, of course, is going to be at the strike price 1,900. Okay, so where the institutionals bought and sold. And the stop loss just a little bit above the last strike price. Then I would like to put another position, a more sniper entry position at, why can't I find it? Where is it? It's down. Okay. At 2075. So let's just put it over here. Just a bigger risk to reward ratio. It's always comfortable to have them. So this position would be a 1 to 2.32 risk position. This is going to be 1 to 4.4. So pretty much you invest $100 or 100 euros or wherever you want, and you're going to make 440. So, these pretty much seem good risk rewards to me. And, gold is very known to have very big sell-offs during the past. And that's why I like to short gold in these kind of situations. Now, technically speaking, let's look at how it's going in the market right now. So, technically speaking, this was the last kind of momentum that the market have. I'll just going to show you it right now. So pretty much, let's going to draw it like that. Now, this is, of course, you don't have to base your analysis on the thing that I'm saying, but I'm just saying that, look, even the sell-off retraced until the channel parallel. So, this is pretty much the line where gold is, the normal price of gold should go in that direction. And currently it's trading way above right now. So that's why I think that during a sell-off, it has to at least move until the medium line. Okay, I hope it makes sense, because it does to me, but I can guess if it doesn't to you. So this is going to be obviously on the short term, and that's why I drew it. But in the long term, or at least the medium term, the actual line that we have to look at is this one. Parallel channel. And let's just say that it's pretty much this-ish, okay? Yeah, I'm pretty confident with what I just drew. And if you could do this thing even in bigger charts. So let's say in the daily, that would be maybe this one. Let's see. Yeah, I would be pretty happy with this one. Like, this is a conservative parallel channel. Okay. I think this would be actually better, so I'll just remove the previous one. Okay. So as you can see, this was the momentum that gold was having from September 2021 to pretty much February 2022. Okay? So this was even before the war in Ukraine happened. And that leads me to suggest that, let's remove this one, that once there will be a sell-off, the price will have to at least reach this zone over here, okay? At least. That's why my take profits are over there. And I would like to add something, that is, it doesn't have to reach the first line or the second line or the intermediate line. I mean, it's just a indicative way to actually trace and place your take profits, okay? I mean, I could see it going something like this, retracing inside and maybe going with a double bottom and then just following. I mean, I'll just draw it like that. So this is the enlongment. So following the trace, retesting, and just going inside, okay? So, I mean, it could go a lot of different ways, but this is what I actually see gold looking forward in doing, okay? Maybe not retracing over here, okay? That was just a drawing of mine. I just drew it quickly, but you get the point. So if the strike price was 1900s, I mean, that will be at least the part of, I mean, the zone where the institutionals are going to buy and sell a lot. So in this area here, I mean, a lot could happen. That's just a fact. So pretty much I could see a double bottom maybe like this, or maybe like that with a neckline at 1,100 for going long afterwards. I mean, a lot of things could happen. I'm not a prophet, but I mean, I feel pretty confident about what I'm saying. I think it will make sense to many, but I hope it will make sense to some, to a certain degree. And yeah, that's pretty much my brief analysis. I mean, I would love to talk a lot more about what I feel about the markets, but today was about gold. And yeah, I hope my analysis makes sense. I will try to update you guys in the future for the next days. And yeah, for the meantime, stay safe and take care. Thank you.